Now let's zoom out. Microsoft operates in the hyper-competitive tech industry. Think cloud wars with Amazon and Google. Software dominance against upstarts like Slack or Zoom. Their business model? A powerhouse mix. Subscription heavy for recurring revenue, Office 365, Azure cloud, hardware like Surface and Xbox adds flair. But the core is software ecosystems. Three key segments: productivity, Office, LinkedIn, 34B revenue, up 16%, intelligent cloud, Azure, 33B, up 29%, and personal computing, Windows, gaming, 14B, down 3%. Implications: high margins, growth at 69% from sticky users. Once you're in the Microsoft ecosystem, switching costs are huge. It means predictable cash flow, but also vulnerability to economic slowdowns or AI flops. In a nutshell, Microsoft's moat is integration. Everything talks to everything else, giving them an edge in the AI era. Looking ahead, Microsoft's prospects are bright, but tied to AI transformations. Key catalysts? In productivity, Copilot's exploding 15 million paid seats with over 450 million total Microsoft 365 users. Expect cross-selling to SMBs and education, boosting adoption. LinkedIn's at $1 billion members, with AI tools driving 11% growth. Intelligent cloud, Azure's the star, growing 39% last quarter. Catalyst? New data centers in Saudi Arabia, Q4 2026 launch, Germany, UK, 3B plus investments. AI agents are huge, 80% of Fortune 500 use them. But watch chip shortages, NVIDIA supply issues could slow things. Personal computing, gaming via Activision, revenue up, but hardware down 32%. Catalysts. Next, Xbox rumors, maybe a gaming PC, Windows 11 AI features. Search, Bing, grew 10%, fueled by AI. Overall transformations, AI everywhere, from Copilot in Teams to Azure OpenAI. Prospects, double-digit revenue growth, Azure in high 20s. Risks, slow AI monetization or regulatory hurdles. But with $625 billion in remaining performance obligations, up 110%, the pipeline's massive. Let's geek out on numbers. Key metrics from Q2: revenue growth 17%, shows strong demand across segments. Operating income 38, 3B, up 21%. Efficiency in turning sales to profit. EPS 4.14. Profit per share beating expectations signals shareholder value. Cloud revenue 51. 5B, up 26%. Microsoft's growth engine. Gross margin 68.6%. High profitability after costs. P/E ratio 25. 9 trailing, 25 forward. Reasonable for a growth stock. PEG ratio 1.58 balances growth versus price. Under 2 is solid. Dividend yield 0.82%. Steady payouts with 12.7B return to shareholders. This means Microsoft's financially robust but capital expenditure at 115B projected for 2026 tests margins. Watch free cash flow down sequentially, but ops cash at 36B is strong. How might consensus shift? Current, moderate by 592 target, 43% upside from 413. Bull scenario, AI pays off big, faster Copilot adoption, Azure hits 40% plus growth, new info like blowout Q3 earnings or OpenAI breakthroughs. Targets climb to 700 plus, consensus upgrades to strong buy. Bear scenario, AI hype fizzles. Margin squeeze from capital expenditure. Enterprise spending slows. If chip shortages persist or regulations hit, for example, antitrust, targets drop to 500, more holds, downgrades. Neutral, steady as she goes. If economy soft lands, consensus holds, with gradual upticks on AI wins. Emerging info like partner deals, for example, Saudi expansion could nudge it positive. Will Microsoft's edges persist? Absolutely. Foundations, massive ecosystem, network effects, high switching costs, data troves for AI, OpenAI partnership, brand trust and scale, 3T market cap, let them outspend rivals. If unchanged, stocks undervalued at 413 versus 592 consensus. It's a bargain. Fair value? If foundations hold, aim for 600 plus in 12 to 18 months, assuming 20% growth, compared to current 45% upside potential. But watch AI ROI, that's the wild card. There you have it. Microsoft in 2026. Challenges ahead, but a beast with staying power. What do you think? Buy the dip. Drop your thoughts in the comments, smash that like button, and subscribe for more breakdowns. Thanks for watching. See you next time.